So morning, everybody. I think Sharanji did a much better job than I would do in introducing this session. So I hope a few of you are awake. I think quite a few of you were at Club Street last night till about 2 o'clock, 2:30. I was getting text messages at 2 a.m. saying, why don't I join them? But enough of that. We've got a great panel of speakers and leaders. The topic today is as wide as one could imagine. It's about how we all together are sort of re-architecting the global financial system. I'd prepared a bit of a speech, but I then realized it's 45 minutes and I want to sort of leave some time for Q&A at the end. So I think we'll get straight into it, and what I'll request is, in the order we're sitting, if you all could briefly introduce yourself. Please.
Yeah. Good morning, everyone, and thank you for coming up so early in the morning for this session. My name is Winston Quek. I'm CEO at SBI Digital Markets based in Singapore. We're a CMS-regulated financial platform. Think of us as a blockchain-agnostic hub connecting into different channels, into Japan, into Thailand, into Korea, into the EU, into Switzerland, delivering both traditional and non-traditional digital assets. So what do I mean by non-traditional assets, right, guys? Anything from tokenization, advisory, into actually bridging assets between private and public chains. So SBI Digital Markets is a subsidiary of SBI Digital Asset Holdings, based in Tokyo, part of the SBI Group, a financial conglomerate. Thank you.
Hi, I'm Shan. I work for DBS Bank. I guess DBS needs no introduction. I run our corporate and commercial banking business. I used to run our retail and wealth business. And DBS and I guess myself, we've been part of the Singapore FinTech Festival since day one. I'd just like to thank the audience for waking up early to be here with us.
Hey, good morning.
Please, Matthew.
Yeah, good morning, everybody. Probably up with a number of people watching the cricket last night, so awesome performance by India. I was born in New Zealand, so not super happy. Hoping a repeat for the semi-final from last time, but not to be. So good luck to India, but well played to New Zealand as well. Matthew, I run the services portfolio at Mastercard in Asia Pacific. Mastercard needs no introduction as well. We're a great partner for Singapore FinTech, but also I look after the services lines of business. So that's everything outside core payments. So the data, the consulting businesses, fraud and cyber security, etc. So lovely to be here and good to see a good number of people for the time it is. So look forward to this.
Welcome.
Good morning, everyone, and thanks for waking up early. I think we all need coffee in the morning. But really great to see everyone here. At Prudential, we are a life insurance company. I am the managing director responsible for our markets in Singapore, Thailand, and Vietnam. And I'm also the CEO of Prudential Singapore. We are really, really proud to be associated with SFF, and this is our 7th year as a grant sponsor. So it's really fantastic to be here.
Excellent. Welcome. So Matthew, we will talk a little bit of cricket, but not on the stage.
Yeah.
And that wasn't to rub it in anything.
No,
but it was a well-played game last night. I didn't get to watch any of it. But let's start with a topic which I think most conversations start and end with these days, which is AI, right? I think it's kind of it's a double-barrel question for you in the sense, we'd be very keen to sort of hear, what's Mastercard's own vision, for its role in shaping the financial landscape. But I think it'd be excellent to also sort of hear your perspective in terms of what is the wider financial landscape talking about AI in what context. And at the end, if you could sort of weave in a little bit around, responsibly governed AI, because that sort of seems to be catching up. And I think there was a couple of sessions yesterday on it.
Yeah, sure. Look, I think that and I appreciate the question. I think for most people like Mastercard, we've been working with AI really in the mainstream business for 10 plus years, and obviously generative AI probably the last 3 or 4 years already, even before obviously the publishing from I guess opening of ChatGPT by OpenAI. I think the point is that AI has been around. It's just really the reinterpretation of machine learning. If you think about it as an AI and machine anyway, so that's sort of where you want to start. And so I think that really, like any tool, AI can be used for good or not. And I think that the basic question for us is that, as long as we feel that it's ethical, transparent, and reliable, people are going to trust it. But it's important not to blindly accept its outputs, right? And you've got to keep people in the loop. So I think that's really sort of where we start. In terms of transformation opportunity, I think plenty of people have been talking about that while we're here. I think we look at kind of three horizons of AI. One is sort of how we're looking at immediately driving kind of efficiencies where there are manual processes, or you can leverage your own internal data to make it better, whether it's a coding buddy, whether it's documentation, whether it's just sort of chatbot improvement, that kind of stuff. Then you're going to introduce it into kind of things that might reach more into being more effective, like we're demonstrating Maya, which is our Mastercard intelligent assistant at the booth outside. And so that's talking about how you're integrating conversational capabilities into chat and also an assistant of some kind. And then more broadly, what are you going to do with new products down the line? And that's going to take a little bit of time. And obviously, you want to start where you've got good governance over your own internal systems as a garbage in, garbage out kind of scenario. You've got to be able to control it because we know what's out there with the biases. Not only is it a data veracity thing, bias, privacy, but with the generative stuff, right, we're now starting to move into the concerns about hallucination and IP copyright, and particularly maybe inadvertent acceleration of cyber. So what are we looking at doing in that space? I think one is that we want to make sure that as a firm, we're really focused on data responsibility. I won't go into that. I think the second piece for us is just this ethical AI framework. You're kind of referencing it, and we talked about it, I think, yesterday as well. And we think about how do we make sure that we're committing to using these resources responsibly ourselves, holding ourselves accountability to look at bias or edge cases and making sure we have that transparency so everybody understands the ability and what we're trying to do with it. And then the last one is sort of the integrity that will do it in a positive way. I think we have a very deliberate governance process ourselves, and it's really about saying, even before we start, we've got an enterprise-wide, we've got risk management, we have legal, we have product, we have the technology people together, and we're really talking about what do we want to achieve. Then firstly, looking at the data. How have we got the data? Is it permission data? What's the right kind of, the use cases that we have for it? What do we want to build? And even before we start moving, that goes through a risk assessment process. Once that happens, then we build, then we pilot, then we review, and then we go live. So I think that's sort of the general way that we want to do it. I think the other thing for us is really just how do we influence at the industry level? Because you want to build kind of a balanced approach. I think there's no such thing as a zero risk scenario, right? But at the same time, there are different levels of risk. And so what I would say is, for example, music and your book tastes, well, okay, well, people might be concerned if your playlist gets out in the open. That might be quite traumatizing for a lot of people, depending on what you listen to. But you're not really too concerned about that, right? But if you go financial, then you go health, then you go security, right? You're going to have to look at calibrating that a little bit differently. And there's a lot of debate, well, is that innovation on one side against the ethical risk, and how do you balance that? I think from a regulatory standpoint, you've got to think about how can you create the framework that gets ahead of this and anticipates the change, but also puts the individual rights right at the center, and so those things are protected. And like, MAS came out yesterday with their MindForge kind of initial results from phase one. But I do think we're going to have to get out there with some degree of regulation or some sort of structure. How are we going to do it? Well, I think time will tell. I think it's the engagement that's key. And I guess the best analogy that I've seen on this one is really the aviation safety standards. When people started flying, you go, well, how the hell did everybody get together to make that happen? And I think that's sort of where we're going to end up going, is sort of a kind of an aviation equivalent kind of thing for usage. So that's where I'm coming from.
Well, thanks a lot for opening. Shan, can I come to you? I'm just hanging on to a couple of words that came out of Matthew: use cases, how it's being utilized. So it'd be great to hear your perspective, both from how is AI being used in its current avatar, right, and I guess the slightly more progressive avatar than we've known for the last 50 years, both across financial services and sort of more particularly across banking. And just to make the question a little bit more specific, around the whole realm of customer experience and customer service.
Generative AI or AI?
You could take AI.
Because like Matthew said, AI has been around for many years. I think the recent game changer has been generative AI, which really is an ability to read a lot of information, to synthesize it, and then to summarize it, and then to spit out, to transform it and to spit it out into something that you want to use or answer a question. So if the question is around generative AI, then what DBS has done, and I think it applies to most financial institutions, is taken some of the specific use case approach, and it's also taken a mile wide, inch deep approach, right? So verticals and horizontals. So the verticals, to your point, is what's the use case for customer service, for example, right? Today, call centers are already, they may or may not be efficient, but with the generative AI, being able to immediately synthesize a lot of information and say, okay, here's your problem, here's the solution, bang. That's a good use case. And in risk screening or adverse news screening, we all deal with AML, millions of AML issues every day. You can't boil the ocean and read a lot of information. So again, the generative AI can be very helpful. And in then other specific use cases, so we use it for ESG, for example, because today we have to do ESG screening. We have to answer the climate questionnaire, the ESG risk questionnaire. And for companies that have sustainability reports, or they don't, but you have information, then again, generative AI can be very helpful in answering some of these questions, barring any hallucination. But I think it's proven, we've used it, it's proven to be very useful. In wealth management, for example, being able to come up with contextual nudges, relevant suggestions has also been very helpful. So I think there's quite a lot of specific use cases from a vertical perspective, not forgetting the horizontal multiple use cases where it can just help everyone save time, help everyone be more productive. Now, if you want to quantify how much, how soon, how much headcount can I save, how much money can I save on costs, I don't think we've landed, but it's going to be an evolution. But the way we look at it is, using both AI and generative AI to help in the whole customer journey, from acquiring, onboarding, risk assessment, right, transactions, credit risk scoring, contextual nudges, servicing, and then engagement, and then that whole feedback loop. The key here is, what do you do with the data generated? You put in a data lake, you have a feedback loop, it loops back, and it gives you then a lot more strength and a lot more context in which to strengthen your machine learning. That's the key.
No, I get, and I think, Dennis, coming to you, for my sins, I did start my career with AXA, and I did spend about 5 years with them in Europe. And actually, this will also give away my age here, I was sort of, we were dabbling with machine learning in insurance at that time. And we've had AI in insurance in some form or shape for the longest period, whether it was on the claim side of it or the underwriting. So again, two sort of double-barrel question. Just to sort of build on what Shan just said about how is AI being used from an insurance context, or whether it's generative AI or what's existed, but also to bring in this concept of how you guys in Prudential or the wider sector sort of focusing on these sort of ethical interpretation or the ethical practices of AI.
Thanks very much for the question. I guess in the area of AI, like fellow panelists who have talked about, AI has been around for quite a few years, but what is, I guess, personally satisfying and gratifying to myself is to see that shift, right? Having AI being a POC, a proof of concept, and how it has kind of really morphed and moved into really real life application, not just small tests, but scaling it up. So specific use cases within the insurance sector, and specifically my company, just to quote a couple of examples, would be one similar to what Shan just talked about, right? Call centers. So insurance policies, right? If you reflect on your own personal insurance policies for yourselves and your families, it's pages and pages and pages, right? Very thick terms and conditions, a lot of different fine prints, specific features and all that. So put ourselves in the shoes of a call center operator, getting those calls that's coming in, and you have to very quickly be able to help the customer. So using AI is actually, these are again use cases that we have already deployed. It will help read through all of those volumes of data, and from a work efficiency standpoint, really help the call center operator. So the use case that we have is literally in the past, certain kind of transactions or queries that takes up to about 4 minutes, that could be done now in about 20 over seconds. So that really helps the call center operator and also gives a lot more convenience and clarity, not just efficiency, but effectiveness as well. So that's one clear example in the insurance sector. The other one is AI-powered talkbot. So specifically in the Singapore context, for Prudential Singapore, we have deployed that. So I know, right, in this day and age for your premium renewals, there are many other mechanisms, right? Credit card, bank sending instructions and all that, that makes it easy. But there will still be some customers, for whatever reasons, they choose to only want to pay annual premiums, right? And if they miss that, it is quite detrimental, right? Because that means the coverage will stop for themselves and the families. So traditionally, what we will do as a company, of course, we use all means to reach the policyholder, inclusive of also deploying our agents. But again, if you rely on more than 5,000 agents to be doing that, you probably will have outcomes that varies across the entire distribution force. So in short, using AI, power that with a talkbot to really remind customers for their annual premium payments. So from our experience, that deployment, we are able to reach successfully 2 out of 3 policyholders for that kind of specific plans. And in that sense, also using the AI, which is also very empathetic, it has been trained to be really empathetic, to listen and to respond clearly to clients, and also with very clear next steps for premium payments. You are able to then collect millions, literally millions of dollars of premiums through that mechanism already, using, again, AI. And finally, Arjun, you talked about ethics. I think that is so important, especially in the insurance world as well. So maybe just one practical step that we have done. Again, it's a no-brainer, but it's so important. It's really, and Matthew talked about that earlier as well, governance, right? So having deployed internally AI and data governing council. So this is really not to increase or add additional red tape to the process, but importantly, as AI and generative AI is such a fluid and new thing, we really want to support our fellow colleagues in the deployment of AI tools. And what this governing council will do is to look at and to assess not just financial risk, non-financial risk, but also looking at these new prospective ideas, whether is it developed internally or procured externally, whether these AI tools will also meet the internal AI framework, the AI ethics framework that we have put in place. So that is very important as we continue to deploy AI tools to the marketplace.
Dennis, thanks a lot. Winston, I'm sure that's warmed you up now, right? Usually the worst seat is the one sitting next to the moderator, right? So I saved the best for the last. We're going to switch topics, right? We're going to move from AI to talk about digital assets, blockchain, tokenization, stuff which I get terribly excited about. A couple of questions, right? So we're starting to see some great promise, right? It's finding its way into, the wider financial services space, whether it's capital markets or beyond, right? So could you sort of, for the audience and for all of us, kind of elaborate a little bit in terms of, the game changer impact that sort of tokenization brings?
Sure.
Right.
Tokenization has been around, 8-9 years now. And I think the burning question with so many people is, where is the adoption? We've been tokenizing private equity, real estate, but how is it that it's not really, mainstream yet after 10 years? I think much has happened in the last 2 or 3 years with regulators getting involved. For example, the MAS, I think, has done an amazing job with Project Guardian. Yep. And I'm taking 1 year back, at Project Guardian, we started with DBS, JP Morgan, doing a very simple live deal on tokenizing, sort of like FX, right? And if you see, we issued a stable yen. At that point, JP Morgan issued a stable thing, we exchanged, and that what I felt was the catalyst. JFSA in Japan was observing the whole project and has since moved on to Project Guardian 2 this year with us. Simultaneously, in Switzerland, FINMA has also gotten involved in Project Guardian 2 this year. Very shortly after that, FCA UK joined the panel. So the momentum is there, right? The regulators are coming on board, providing support, allowing the private sector to lead, but in the background providing the support. So this year we have demonstrated issuing a security on the stable Swiss, moving it into DBS, and then repoing the token into Shinsei Trust, one of our banks in Japan. And that cycle is completed. For too long in tokenization of financial assets, half the journey was only completed, right? If you issue a security, the security sits as a token, but there wasn't really much utility. Today, we have proven that you can now repo, get financing, collateralize that, and I think this is the next step to proving that the whole journey and the utility of the token in a traditional financial instrument is complete. So what have we learned, right? Efficiency, reducing friction in operational procedures has been streamlined. I think that is very important. Far too often when you have an audience, speakers on tokenization and digital assets, you find that it's mainly product providers, people who are building product, people on the sell side, right, promoting solutions. But if you look at the less glamorous and often very important component in tokenization, middle office, back office, buy side, there seems to be an imbalance there. So at SBI, I think we are trying to solve for that side first, building product in a tokenized format, but not being able to distribute it, and then looking to acquire clients to be able to accept the product in a token format, has shown that it is a very difficult process to overcome, right? So at SBI, we have worked the opposite way. We are fortunate to have SBI Securities in Japan that has done several tokenized real estate projects, distributing to retail. We have also done some fixed income. They are now able to look at accepting tokens for their clients. So it's a big step, right? So we are working with partners, banks, issuers to now commercialize that effort. It is a big step. I think 2024, 2025, we should see the adoption improve, right?
Thanks. Matthew, let me come to you, right? Just staying with the theme of tokenized, I think we talked about tokenization of sort of assets. Let's talk about tokenized deposits, right? I think, I guess, can you discuss their role in the evolution of tokenization as a topic?
Yeah, look, I think that, and really great points, I think that at the end of the day, right, what we're looking at is, tokenized deposits are really just the equivalent of existing deposits that are just, on a licensed depository institution just held on the blockchain, right? But what does that do and what does it release? It's sort of the access to the programmable and controllable aspects that come with a smart contract, right? And then you have to think about where those use cases make the most sense. Obviously, there's an opportunity in stability, and obviously MAS is on that with its program, with Guardian. But I think the point about this end-to-end digitization, that's really the ultimate opportunity. And if you've got a lot of intermediaries, potentially the ability to really make those processes or that transaction happen much faster is clearly they're leveraging the smart capabilities, right? So improve speed and efficiency or decrease costs or automate processes. And the interesting thing for me is I think about when I started in banking and international, and one of the things that I used to do when I first came out was check letters of credit. You know, you get the documents, you'd be sitting there at international services, and you'd have the LC in your hand, and you'd be going, okay, I need this bill of lading, I need to see this invoicing, I need to see these terms of freight.
So Gen AI can help with
Yeah,
that.
and so there's a Gen AI piece of that, but there's also the opportunity for the tokenization piece, and you create a very straight through process that can deliver atomic settlement and make that make the coin immediately available if those tokens, if the conditionality that's in that contract is there. Or if you're looking at, say, a cash management solution, if you're a treasurer, all of a sudden you've got the ability to manage your liquidity, not in the window or when the trading desk, if you're making a call, you don't get cut off at 3 o'clock. Right, you're able to do this instantaneously, and so those tools can be made available to customers. And so I think it's trying to find the right use cases. I think to a certain degree, it's always been an edge case. That's sort of always been the appeal, which has sort of left it to be niche. And so I think now, as we're seeing the greater connectivity, I think you're seeing this value can be created because we've proven these things out. And I think for us, what we're then trying to do on the back of that is build the multi-token network. Effectively, because what you need to do is the infrastructure to run this, right? So we look at how do we do that? We want to help the transactions, we want to drive trust in the counterparty. So identity management, using our technology to make sure that people are who they say they are and they have the permissions necessary, right? Or that you've got the trust in the digital payment, that you've got the regulated, right, kind of payment tokens, or the consumer protections in some cases, or rules of the road that come with scheme management. And also that scalable trust in that technology on a global basis. I think the points have already been well made. You've got the environment is ready to make these things happen. It's just how do we make sure that we bring those all together and are really delivering tangible value about solving kind of real world problems. And I think we've started to have good success with the Australian CBDC pilot with the RBA, etc. So I think it's sort of come off the boil a little bit, but I think the time is there for people. They now understand the value. And I think that's really critical. What value are you delivering for the participants? And if you focus on value and obviously making sure you've got that trusted infrastructure behind it, we'll start to be able to push some more.
Thanks, Matt. So again, we're going to get to another topic. I'll frame it. I think Shan won't remember. The first time I met her was about 7 years ago. I was about 30 pounds lighter. And we were doing some embedded finance. I used to run a fintech unit for one of the largest sort of retail conglomerates. So Shan, question for you, right? There is new ways of banking, or may I say there are old ways which are finding new digital avatars, right? Whether these are alternative ecosystem-led financing or the poster child sort of baby, which is embedded finance, which could mean anything and everything, right? How do you see it sort of transforming banking globally? And Shan, before you answer, Dennis, dive in from an insurance side once Shan is done with her answer.
Sure, dive in anytime. So when we launched our latest tagline, which is DBS Live More, Bank Less, everybody said, wow, you don't want us to bank with you? And it's no. We want the bank to disappear. Yeah. Right? Disappear where? Right? To disappear into the customer's own journey, right? And if you're a retail customer, it could be your everyday journey, it could be your episodic journey. So your everyday journey is your payments journey, your food journey, your transport journey, your entertainment journey, right? If we're embedded in your shopping journey, you check out, the card's there, the loan is there, bang, pay, borrow, whatever, 3 clicks and you're done. That's how you disappear in the customer's everyday life. And in the episodic life, buying a house, buying a car, getting married, having children, again, embedding your financial service in their journey, and not necessarily in your own environment, in somebody else's environment. Could be home, could be real estate, it could be, as I said, transport or whatever. You're embedding yourself in somebody else's journey, but the customer is in that journey. From the corporate side, it is really looking at how corporates interact with each other or their customers, and then embedding that financial service into their journey. So take insurance, right? Dennis can chip in. If we have a corporate client who's an insurance company and they're selling lots of travel insurance in their own app to all their customers, it's how do we help them to collect the payments in real time, which we do now, everybody does, and then link that to the airport data to say, oh, okay, all these flights have been delayed by more than 4 hours. The moment the flight is delayed, we get a API call and they say, okay, help the insurer to pay the insured client their ticket money back or whatever. And that's a seamless journey. It's real time, and you're really embedding. You're disappearing behind the insurance company, but you're the engine that helps with the payments and collections. Similarly, if you embed yourself in the customer ecosystem, all corporate clients have their own ecosystem, right? You could be an anchor buyer, like a big MNC with multiple suppliers. Well, you embed yourself in that sort of supply chain ecosystem. You take the data, you help them. It could be sustainability linked, it could be credit linked, but you offer your financial service seamlessly in that trade supply chain ecosystem. So there are multiple ecosystems, but I think it's kind of thinking less about, here's my product, I want to sell it, but more about, here's the customer journey, how do I embed the product, and how do I make it so seamless that you disappear?
Dennis.
So adding on from an insurance perspective, right, you talked about embedded finance. So for embedded insurance likewise, so traditionally, it's always in our own insurance company's environment, right, digitally, that you can serve the clients. But more and more, we are seeing that embedded insurance taking place, whereby we are hosting these solutions in, say, food delivery platforms, banking partners, digital platforms, for example. And I think these are making things a lot easier. And importantly, it's the bite-sized insurance products, right? Simple to understand, simple to execute. Those, I think, are the ones that we are seeing a lot more traction, honestly. And importantly, for our business across the globe in many, many markets, especially in many of the emerging markets, these bite-sized insurance policies also really helps from a sustainability, from an inclusive practice perspective, really helping the masses out there. So really, I think the embedded insurance approach is going to continue to take off in a big way, and we can definitely see that as helping in terms of ESG angle as well. That's going to be one fabulous, I think, impact that we can make to society.
Excellent. So Winston, coming back to you, right? In terms of, let's just moving a little bit beyond sort of concepts in the world of sort of digital assets infrastructure. How are you guys starting to use the technology of blockchain in sort of commercial, sort of real activities now?
Okay, so commercializing what we're doing is something very dear to our heart, and we are now executing across several fronts, right? Let me take a live case that we are working on in real estate. We're taking hard assets out in Japan, a very simple approach, but to tokenize these assets and then distributing it into Japanese retail client base. I think if you think about the concept, it has existed in form of REIT. You don't need a blockchain to do this. I think in the traditional form, it has already been proven, right? But if you think about the processes involved, I think that's where the value add comes in, right? We've been able to build these products. When you deliver the product, the tangible cost savings versus a standard fund format can be realized, right? For example, the registry is now on chain. If you think about that, that's pretty significant. A custodian, the cost arguably can be equally competitive or maybe even cheaper, right? So these are steps that often are not highlighted when you talk about the commercialization of tokenized assets. The common theme has always been about bringing private equity, democratizing. Those are all very important aspects. But we're starting out to work very closely with our sister companies in Japan, SBI Securities, and on the asset management side, to be looking at delivering these products with a twist. Now, when I say with a twist, is being able to address the operational streamlining, right, and getting these products out to the market in a frictionless manner. Japan is a very key market for us, but we are also looking across Asia. Thailand and Singapore are equally important. So next steps for 2024 is really to work with partners on the ground to achieve adoption of tokenization. It's not something that we can do alone. We need motivated partners that have their own buy-side client base to come along with us on this journey of adoption and to experiment and learn, right, and to push forward together. So that's on our roadmap for 2025 and 24. Yeah.
So thanks. So I'm going to open this question up. Sushan, I'll start with you, but others can please chip in, right? So I guess no conversation about re-architecting any form of financial system is possible without having a conversation around financial inclusion. And if I may take the liberty, I'm actually going to take a slightly broader definition of financial inclusion to looking at it from an underserved market, which could be individuals, small businesses, and so on and so forth, right? Right. Question is, what advances are you seeing? What's new in the way organizations such as DBS or your peers are addressing this sort of important concern? And as I said, please others dive in.
Well, I guess the availability of mobile phones combined with digital data trail means you can combine both to provide a financial service to hitherto people or companies or micro SMEs that didn't have access to collections, payments, loans, right? And also partnership into bigger ecosystems to really help them to sell more of their product or their services. And as I said originally, if you embed yourself in those little ecosystems, you can actually enable that financial inclusion. And for the corporates or the micro SMEs, it's really working with ecosystem partners. So I'll give you a live example. We work with a large Western MNC fashion house, a global fashion house, and they said, oh, Sushan, we really need to green our supply chain in some of the big growth emerging markets where a lot of our textile providers come from. We're not sure if they're using organic cotton. We're not sure if the textile garment makers have solar panels and have these different things that will make them ESG compliant for us. Can you help? Well, if we are and we're in India, we've got 600 branches. We work with the national farmers associations there, who then in turn work with these organic cotton farmers. We can, through our digital partnerships and through our physical partnerships, so it's not just purely digital, it's phygital, to be honest. And we can then say, okay, I know you've got an anchor buyer here. I know that if you do A, B, C, D to make yourself sustainable, they will give you their orders. Therefore, I will finance you in this journey. So you help to make them green. You make sure you finance the supply chain. You've got an anchor buyer. You work with farmers associations to make sure that they are doing what they said they would do. And bang, you've got this wonderful ecosystem where multiple hundreds, thousands of suppliers suddenly getting money to make themselves sustainable, getting a big order coming through from a Western MNC. And that's enabling both financial inclusion and layering ESG at the same time. For the mass market, wealth management was always a purview for the high net worth individual, but today you have democratized wealth management, and I think the ability to then look for the best product at the best price, at the right time, right place, I think that's democratization and financial inclusion, right? But also then saying, I will bring financial products to previously unbanked, or the elderly. Now, that means you do have to bring in human interaction to people who are maybe not so comfortable with using a mobile phone to invest or to pay. And this is where DBS has the post office. We're a community bank. And using the post office, and we call them the the digital aunties and uncles who are people the same age as our more elderly folk who can say, hey, I can do this. I know how to use PayLah. I know how you can, use a digital app to receive payments or to download your workfare or to get your $3 hawker, free hawker meal on Friday, etc. That's, I think, combining the physical and digital experience and enabling, transactions to happen in a seamless way.
Yeah, and I get that, right? I think people get a bit carried away when we talk about digital, right? I think we take it a bit too literally. I think there's a vast majority of the world which still wants digital. I was at a conference, actually part of SFF a couple of days ago, which was on why digital banks fail. One of the conclusions which was coming out was that I think a bit more of a digital approach might not be a bad one. But in any case, just to add to it, does anyone on the further side of the room or here want to add to what Sushan said?
I just have a couple of the points on this one, right? I think that this digital point is really clearly there, but also the technologies we've been talking about have been going to be very enabling, right? Generative AI, the ability to deliver translation, excuse me, to many different dialects and really could create a smart tool for somebody who's going in and doing village lending and this sort of thing. I think that's really, really important. Data requirements, I think the Personal Data Protection Act in India right now, you've got to be able to comply with 22 different languages. So how are you going to be able to do that? You're going to be able to leverage technology to make that happen. Or we want to make sure that we're partnering with a mobile operator to drive financial literacy, or our community pass to empower farmers with greater devices. So I think the point that's really out there for all of us is that inclusion just isn't about getting over the poverty line, right? There are like 4.7 billion people who are still living on less than $12 a day from a PPP adjusted basis. And that's what kind of the number that's out there to say, you can be financially empowered if you earn about $12 a day PPP. But that's a long way from the poverty line, which is $2 a day. So I think it's all behoves us to make sure, how do we do that? And how do we make sure these folks don't get left behind with this? And how do and when you hear about the stories about prompt engineering and getting high pay, but how do we actually create that democratization, those access to those tools? So perhaps with a lower tech phone, with a cheaper phone, you're able to really provide access and tools so people at the bottom end of the pyramid can improve their lives. And I think that's really the next step that we really need to focus on, with the confluence of all this technology.
Moving on from an insurance perspective, I guess what I alluded to earlier in terms of financial inclusion and specifically financial protection inclusion from an insurance perspective is using cases, for example, that what we have seen in Prudential Africa, right? Having those micro insurance policies that's less than $1 embedded and serving protection needs for the community. Closer to this part of the world, right, in Indonesia as well, in an emerging market, we have those deployment, again, using micro insurance. And for a society in Singapore, like this mature industry, mature market, we have dengue protection. And this allows the customers to take it not whole year long, but you can take it at specific periods, depending on the needs and depending on how the situation is locally here. So I think these are all the flexibilities that we're really trying to go out there to provide these as a platform to also bring non-traditional customer base into the company. And from an insurance company perspective, I think in the past, it takes a certain time to manufacture a certain insurance product. And typically it's fairly heavy, it's complex, right? It's what I call mid-size or big-size kind of insurance policy. But importantly, to drive inclusion, we have got to really look at how else are we going to have those micro insurance to really serve the public.
Excellent.
Maybe just as a closing comment, tokenization from a digital asset perspective can, of course, include many other unserved clients, right? But I think from a suitability and governance guidelines, framework, policies, we're still at very early levels, particularly in AI and even in digital assets. I think, especially for the underserved, we have to remember to always serve them correctly, right? Because to be able, for the underserved to get microfinancing through a microfinance company already exists. And if you look at how interest rates are used in that framework, it's still very high levels, right? As we go along this journey of AI and financial inclusion, we must always remember to protect and look after these clients, right? As that is, I think, a duty of all financial institutions, is to have the right governance and the right policies in place as well.
So we've got 42 seconds. We're at the Singapore FinTech Festival. So I thought it would be appropriate for me to sort of leave the open question in terms of FinTech in the broader sense. And Winston, you come in from a digital infrastructure perspective. So please, anybody can take this question, right? It's increasingly the incumbents and FinTech rather than versus FinTech. And I think we've all come to sort of realize that over the last sort of decade or so, right? How do you actually see these relationships form going forward, right? And I'm very keen to hear, either a macro perspective or coming from your own industries. And specifically, if I want to, come to you, Dennis, insurtechs held a big promise, at least from the parts of the world where I do work at. Don't do much work in this part of the world these days. It hasn't really realized the promise, right? So maybe we start with you, and then everybody else can sort of, weigh in on that question.
No, I think forums like that is really fantastic, right? People coming together, sharing ideas, traditional companies, fintechs, and like you said, right, insurtechs. I think this really helps us sharpen one another. Ultimately, it's for the benefit of the consumer, right? We really have to really sharpen each other, and it allows traditional companies also to up the game as this world continues to really fast digitalize, and clearly deployment of these tools is important, not just internally, but having benefits to the customers out there. So clearly, from my perspective, in short, I see convergence. I see convergence and more people coming together to work this through. I see ecosystems being built. Ecosystem is a big word, but government agencies, the private sector coming together and to build that through a convergence, I think that's important. Clearly in this part of the world, specifically in Singapore, one clear case is the SG Findex, right? Starting with the banking system, with insurance now added in. And imagine the world out there eventually whereby you have healthcare data, maybe digital assets coming in, right? From a consumer perspective and with consent given, how you can actually make sure that the individual or people helping them have holistic view of their total portfolio. And so I think that's really going to be the world.
Yeah, I mean, for me, I think the first thing, fintegration is key, right? You've got to be, how do we integrate with the fintechs? And I think that it's clear you can't do it all by yourself, right? No one has that capability. So partnerships and your ability to do partnershipping is going to be really, really important. And you need to be able to have that way of, enterprise access. You need to make yourself, if you're a large company, easier to deal with. We've got a number of acceleration capabilities. We run what's called a Start Path program to make sure that we create and curate relationships with fintechs, and then ensure that they're got the scalability and the capability. But then we let them have their own engagement with clients. We don't need to nanny that, right? But the reality is that if we're going to make a difference for our customers, we're not going to get there by ourselves. So how do we embrace the best in class? How do we get the intelligence at the edge of our systems by working with these partners? So integration is key for us.
Thank you. Susan?
Well, financial services are all about technology and people, aren't they? So we like fintech, we work with them. I think it's a symbiotic relationship between fintechs and big banks or big financial institutions. But let me tell you, what really scared me or scared us, say 12 years ago, was the tech fin, not the fintech. It was the tech fin. It was the giant tech companies that were coming in and going to eat our lunch, right? We were terrified of those. We were thinking, gosh, if Google created a bank, if Apple created a bank, if Facebook, it was called Facebook then, created a bank, gosh, we're out of business. And so it was the fear of the tech fin, literally coming in and eating everyone's lunch that kept us on our toes, right? And you quickly learn, work with the fintechs, bring them in, keep them close, and make sure you're always ahead, and then be inspired by the big tech companies and how they look at everything radically different from everyone else. Learn and learn from them and stay ahead. So I would say I think the difference between a traditional bank and a digital bank and a fintech is kind of merging now. It's not so bifurcated anymore. We'll find an equilibrium or middle, but the smaller unbanking kind of fintechs will continue to innovate and do the experiments and come out with great ideas. Some will work, some will not. And the big tech will continue to keep us at our toes. But that's the evolution that we're in, and it's exciting and it's fun. It's very fast. But hey, that's why we're all here, right? To learn.
Yeah, we need each other and we're inspired by each other. I think that's the key.
Co-opetition.
Yes.
So as a closing comment, I mean, most of us are either in banking, insurance, distributing product, consuming product. I think the common theme here is margins are eroding, it's getting really competitive, spreads are too tight, and we've been talking about this for a long time now, right? But we also recognize that technology can change all this. And in the last few years, blockchain, the theme of blockchain seems to be the one that is pointing towards this revolution, right? But yet I think many of us are still hesitant. We have experimented, we've done POCs, but to commercialize, fully adopt, I think we are on our way, but we still have a lot of work to do. So yeah, public sector, private sector coming together, building that framework, building consistency in how these digital assets are traded, accounted for, and how they're measured. This change is real. Right? It has already started. I see bulge bracket banks out there with real initiatives to change. I think we'll see 2024, 25 as very exciting years for the blockchain adoption. So stay tuned, right? And we must do this together. We must be brave and now have the courage to challenge status quo and our past legacy, right?
So I'm going to take some liberty here. We haven't heard any music. We're not getting Oscars being awarded. So I'm going to take one question from the group because thank you all for making it in the morning. My request is a quick answer. We haven't talked about ESG at all, right? And there are a couple of questions out here. So I guess the question's quite open-ended here, right? The role of ESG and how's that shaping the future of financial services? Anyone can go first.
I think it's coming in as a key consideration. All banks or all financial institutions want to do what's right, and that means measuring the impact of what we're doing. What is our carbon footprint, and being able to help customers in their own reducing their own carbon footprint and recognizing that it's not a straight line from brown to green, but it's a transition, and being able to weave in financial services and loans and data to help them through that journey from brown to green is imperative. And I think that's how the overall financial ecosystem is changing, so that we make sure that we bring in the right kind of data and measurements, and if you come to the DBS tool, you'll see our climate analytics tool. It's really us working with each different industry, the biggest polluters, right? And the way we've looked at it is we look for impact, where you want to be pragmatic, and we also want to be financially sustainable and not just sustainable. So you can't do this for free. You've got to work with customers and make sure that it ties in with their overall CO2 emission glide path. So coming up with that glide path, working through the data, helping them pull the data, and then matching that with your financial solutions is in a way a new way of incorporating ESG into our financial journey.
I think for me, it's just like we've talked about, this entire system is putting the customer first, right? And you've got to build trust. And this is very consistent across all the themes that we've talked about. If you put the customer first, focus on the value in the customer journey, deliver that trust. But when it comes to ESG, you've got to be authentic. Customers you won't pass the sniff test unless you're doing something material that people see that you're making progress. And I think to have that credibility, you're going to have to stand up, you've got to start to measure, but you've got to move, right? And I think that's the key, is in this current environment with the intersection of climate and sustainability and everything else, this is the only one we've got, right? So if we need to make a move, it's really important that we're demonstrating that authentically and we're doing stuff. And not just for checking a box, but you're deliberately demonstrating to clients how you're moving the needle. And I think that's really what's critically important.
In insurance, it's really so exciting, and I think it's so purposeful in this period of time as we focus on ESG, both at the front end and at the back end. And what I mean by that is at the front end, it's really creating product solutions for the customers, right? Using ESG as a main theme, really helping and serving the needs of the customers. But equally important is at the back end, because as an insurer, after selling the insurance product and collecting the premiums, the billions, the tens of billions, and the hundreds of billions, we are actually uniquely placed as both an asset owner as well as an asset manager. So working with the asset management firm to really deploy those monies and make sure that the entire portfolio is greener and greener over time. So really exciting times.
Thank you.
From the digital asset perspective, again, tokenized carbon credits.
Yep.
That's a theme that is growing really fast to allow participants who are in surplus or in deficit of carbon credits to be able to effectively trade, right, and do their part in this ESG journey. I mean, this is multi-decade long journey, but in every aspect of finance, I think there's a conscious effort to be involved. So yeah, I think it'll continue to evolve in a very positive
And I guess
manner.
it's a very opportune question. We're a week away from COP28, which is the UAE. I think, thematically, there's one of the biggest themes is going to be climate financing, right? Which I think everything which you guys have said will contribute. But with that, Dennis, Matthew, Sushan, Winston, thank you. Thank you to all of you to have made it this morning, bright and early. Hope you all have a good day. So I guess we owe the panelists a round of applause.